Hey everyone, welcome back to your weekly market outlook. This is the first one for the month of July, 3rd to the 7th of July 2023. Let's get started with a quick look at what the market has been up to last week. So we've got the Australian CPI, really a surprise to the downside. We've got 5.6% versus a consensus of 6.1%. That drop was from 6.8%. So that's a 1.2% drop in the yearly CPI or the headline CPI for Australia, which is a huge thumbs up for the RBA. So with this kind of numbers, we are going to assume that the RBA is not going to be doing anything for this week in terms of the interest rate hike. We're likely going to be seeing a pause here from the RBA. Now, next up, we've got the ECB hosted a central bank meeting that's in Sintra in Portugal. So we've got the forum, a panel discussion between ECB, Bank of England, Bank of Japan, and the FOMC. As per usual, FOMC is a little bit more hawkish than what it is compared to the Bank of England, but Bank of Japan remains super dovish in terms of their monetary policy. No surprises there. We do get a little bit of hints in terms of whether or not they're going to be tweaking their YCC and whether or not they're going to be adjusting their monetary policy. I don't think we are going to be looking at that anytime soon. In terms of intervention, that's not going to come from the Bank of Japan. That's going to come from the Ministry of Finance in Japan, but there are several technical levels that we're keeping an eye out for in terms of where and when they would probably intervene. And then we've got the US final GDP numbers. This is really good, surprisingly, up from 1.3% to 2%, surpassing the consensus of 1.4%, really lifting the market up of a potential soft landing. I think the US economy, as I always say, from last year, we're not going to be looking at a recession, and that data really shows with the final GDP numbers on the quarterly GDP numbers from the US. Unemployment claims a little bit better, 239,000 versus 264,000 expected. Other than that, we've got the PCE numbers. PCE numbers remains flat for the US last week. All right, so what's in store for this week? Let's get ahead with the holiday schedule first. So the US is going to be celebrating the 4th of July, obviously. So Canada Day on Monday. However, the working hours or the trading hours on Monday is it's only half day. Market is going to be closed at 1 p.m. New York time, so just keep that in mind if you're trading on Monday. We're likely going to get a little bit of a quiet start of the week on Monday and Tuesday. Pretty much everyone's in a holiday mood in the US, so expect a little bit of a quiet US market, potentially a super volatile US market depending on what it is, but it is pretty much a holiday on Monday as well as on Tuesday for the US market. We've got the Australian RBA numbers, the rate announcements on Tuesday. Again, no surprises here with that kind of drop on the CPI, and how the RBA has mentioned in the previous statement that it was a tough call to hike, considering that the wages also went up in Australia. So I think we are likely going to see a pause from the RBA. So this is, again, as per consensus, it's going to stay flat at 4.1%. We got OPEC meetings all day on Wednesday. So, oil traders, you might want to keep an eye out on that one. We've got the FOMC meeting minutes on Wednesday or Thursday. If you're in Australia, if you're in Asia, it will be Thursday early in the morning, kind of midnight there. But we've got the FOMC meeting minutes. Again, not really much of a surprise here in terms of what they're going to be doing. I think the wording is still going to be there that they have 2 more rate hikes in 2023, and that's pretty much scheduled. We've been getting messages from Jay Powell in terms of what they want to do, and that's basically what they're going to be doing. So I don't think the FOMC meeting minutes is going to be a huge surprise, but it would pretty much give a little bit more of a confirmation that the FOMC is not as dovish as the market would think of them to be. We've got the ADP NFP numbers. Again, not really a huge game changer. I don't think this should be considered a high impact news for the employment numbers, but it's there. It's the ADP and NFP numbers. We got a weekly unemployment claims from the US. Again, expected to go up a little bit, 247,000 versus 239 from last week. But if any indication, the last week's number would probably indicate something that's below the consensus as well. We got the ISM services PMI. We also have the ISM manufacturing PMI on Monday. No surprises here. I think we're going to be looking at, still manufacturing PMI that's still below 50, services PMI that's still above 50, but, it kind of balances out itself. We've got the JOLTS job opening numbers. Obviously, this is going to be a market moving event. We got a surprise to the upside last month at 10.10 million. This month expected to come in at 9.94. If we get a number that's still above 10 million, I think that's going to be a huge boost for the US dollar itself. We got a speech coming out from Bank of England Governor Bailey on Friday. I don't think that's going to be much of a key event unless you're trading the sterling. And then we have the NFP numbers. Now, if we take a look at the NFP numbers, last month's surprise was 339,000. This month, I think we're looking at a more normal level at around 200,000, 222,000 level. So as long as it's above 200,000, I think it's still going to be great. The unemployment rate, expected this one to drop down back to 3.6% from 3.7%. I remember last month was a surprise surprisingly good NFP numbers, but kind of a really bad unemployment numbers, and it causes a lot of confusion in the market. So last month was 3.5 to 3.7%. This month we're expecting a drop back down to 3.6% for the unemployment rate in the US. All right, let's move on to the technical side of things. The dollar index pretty much capped at 103.50. This one here, I guess we're still looking at more dollar strength to come in. Take a look at the correction here up to 103.50. That's pretty much about 61.8%. We do have support at 103, 102.50. I don't think we're going to be looking at 102 this week, but it's still going to be there as our support level, 102, 101.50. But I think we're really looking at a range between 102.50 and 103.50 for the dollar index this week. All right, moving on to the Aussie USD. The Aussie USD, if you've been following our trades for the Aussie USD the trade has pretty much been done. We've been shorting the Aussie USD from 68 cents to about 66.25. So we do have a little bit of a bounce coming off 66 cents. And I think this support is likely going to hold. I think we're still going to be looking at the 66 cents mark to actually hold. In terms of resistance right now, we are looking at a weekly pivot pretty much at 66.60, right at 666. But yeah, it is there. Beyond that, we got resistance 1 at pretty much about 67.25 level. So we're still going to be looking at a potential retest of 67 cents. Any rejections from 67 cents, that's probably a cue for the market to go in for a little bit of a short. However, if we take a look at the changes in the momentum here, the 66 bounce could actually be a stronger bounce than we anticipated. So we could anticipate a move towards 67 and potentially 67.50. Could we anticipate a return towards 68? Potentially, but that would be on the resistance 2 on the weekly pivot. So, but if we do have that shift in momentum right around the bounce of 66 cents, if the stochastics move up above 20, then yeah, I think we could see the push hard towards 68 cents. However, if the market turns around at around 67 cents or 66, right, then we might actually have the stochastics remaining below the 20 level. Then we could see further progress to the downside for the Aussie USD. But so this one here is more of a wait and see for the Aussie USD. Next up is the Euro USD. Euro USD, not really too much of a concern in terms of where the momentum is going to go. We are really more focusing on the key level here, which is at 1.0850 to 1.09. This is a significant support for the Euro USD. This one goes all the way back. However, just do keep in mind that price is actually trading above that 1.09 level. So technically, we have actually bounced off 1.0850 to 1.09. So we have surpassed that, and I think in terms of how far the market could go for this week, we might actually see a potential return closer towards 1.1 on the Euro USD. So if you're thinking of whether to go long or to go short on the Euro USD, right now at this point in time, it is preferable to actually go long on the Euro USD with a stop loss just below 1.0850. In terms of risk reward ratio, it's going to give you about 1 to 2 risk reward ratio if you're going to be targeting 1.1 on the Euro USD. All right, the pound USD, very similar situation here. We have that bounce off 1.26. Now, if we take a look at that 1.26 level, which is the bounce from last week, this is going to function as the support one on the weekly pivot. The market has already opened above the weekly pivot, so I think we could potentially track a little bit higher on the pound USD. Now, if we take a look at the formation on the pound USD here, you can actually see a bullish flag kind of forming here on the pound USD on the daily time frame. So ideally, if we see that break above 1.2725, this is the key level you want to keep an eye out for. It's 1.2725. If it breaks the 1.2725, then we are likely going to track higher. We're going to be looking at a move towards 1.28 and 1.2850, potentially even 1.29 for the pound USD. At this point in time, it's really hard to go short on a pound USD. However, as I mentioned with the previous outlook, the next 2 weeks for the pound USD is going to be critical, because if we take a look at the stochastics there, sorry, not the Ichimoku cloud, it is actually very thin. So any transition below 1.25, that would actually take the pound USD back into a downtrend. But however, if we take a look at price here, it is still at about 1.27. We're still about 200 pips away from that. If we also take a look at where the support to for the week is, it is located pretty much at 1.25. So I think we are likely going to get more of a stronger support, unless Bailey says something dovish on Friday, or the NFP numbers comes in really strong, the unemployment goes back to 3.4%. I don't think we're going to be looking at that scenario. If we anticipate what the consensus is for the market, I think we could potentially see a stronger pound USD to happen. Okay. Next up is the Dow Japanese Yen. Obviously, now if we take a look at the Dow Japanese Yen, 145 is the key level. This is the level we mentioned. If we price breaks 141, we're going to be looking at 143, and then we're going to be looking at 145. That pretty much has all happened. Right now at 145, this is the level where traders are, a little bit cautious, because this is going to be the level where the Bank of Japan and the Ministry of Finance in Japan is going to start monitoring the FX market. Are they going to intervene at 145? Probably not, but it's still going to be a concern. So we are going to be looking at a little bit of profit taking going on in at around 145. We've already seen this on on Friday last week. We see price breaches 145, and then there's a little bit of a sell-off. However, we're not seeing enough selling pressure at this point in time. So we do anticipate another attempt at 145, potentially and ideally an attempt towards 145.30, where the resistance once located. Once it's there, and if there's a strong selling pressure at 145, then that's where we actually want to go short on the Dow Japanese Yen. Dow Japanese Yen hasn't actually corrected itself, so it causes a lot of concern for longer term traders, or swing traders, or position traders, or trend traders. So we are looking at 145 as an exit level for our long positions, and now at 145 we do anticipate a little bit of that profit taking to potentially causes a little bit of a reversal in the market. We're not talking about a full trend reversal, but we do expect a little bit of a correction to happen. If we take a look at where the support 1 and support 2 is located, it's where the Tenkan Sen and the Kijun Sen is also located for this week. So we anticipate a potential return towards 143 and potentially towards 142, and that would still be technically ideal for the Dow Japanese Yen. Again, with how the sterling yen and the euro yen is positively correlated to the Dow Japanese Yen, there are similar levels with the euro yen, which is at 154, I believe, and then 158 on the euro yen and 184 on the sterling yen. It all function the same way as the 145 on the Dow Japanese Yen. All right, so that's pretty much it for this week. Good luck with your trades, and I'll see you soon.